All right, what is going on, everyone? We should be live. Hope everything works today and I don't spend 15 minutes talking on my own. Ben, what's up? Rai, Mark, Samir, hello everyone. Got the coffee, ready to go. I think we're live. All right. What is going on, everyone? How are you doing today? I have a few topics that I want to talk about today, but it would be great if we can get some questions throughout the episode. I definitely think I'm gonna keep it a little shorter than yesterday, and we're gonna do a bit less chart work because we went really in detail in episode 1. So anyways, I'm gonna finish this coffee and we'll get right into it. If we take a look at the charts already in the meantime, we have quite the interesting moves in the past hour or so. Do you like to trade stocks also in the future? Yes, absolutely. It's definitely one of my goals to start trading stocks in the future. Yes, it's definitely not something I'm looking to do like soon. I want to build my Forex account up, and we'll focus on stocks in the future. How's everyone's second quarter going? I know it's been 2 days, but have you guys set any goals for this quarter? Did you accomplish your Q1 goals? There's a great video I was watching by Mark. You might have seen it on my story last night. You should definitely check it out. It talks about setting goals. It's a great video. I had a question: how you decide whether a trade should be taken on first correction and not the top of the structure? Okay, that's a great question. So I'll get into it in just a second. I'm currently in wheat short, which I got tagged in a little. So I'll go in the wheat trade, and then we'll go back to your question, right? So I was looking at this for wheat. So obviously we're looking at a bigger push up. We had the structure like this, and yeah, we're looking at this as a middle section to get another move up and potentially get involved in the short from here. We got this little hover, which was a valid trade we could have taken to the downside. I deleted the other trend line, and then we started dropping out. So this could have been a good trade that I missed. It was definitely better than this hover here, targeting just this low. So this would have been a great trade. Little hover just pushes out of this early break. Hello, what's up? Early break to the downside, we get a confirmation, and we could have gotten involved either like here, probably as a reduced risk like this. Fortunately, I missed that trade, so then we're looking at this bigger flag here. So bigger arc, we're looking at another push here to get involved to the downside. We got an early break from that as well, and then we started this little 15-minute hover right here. So I placed my order just below. It was actually a bit higher. I placed my order just under it, but yeah, the market got halted for some reason, and so I got triggered in a bit lower, which is not an issue at all. But we're now in the trade. It's not running in much profit for now. It's at about 0.5%. We got our first target, which will be somewhere around here for 2%, and then gonna be looking to hold it for a little bit longer, targeting this area for, yeah, this trend line here for about 10-11%. So that's the trade I'm in currently. We're gonna hide that. I'm gonna go back to your question that you wanted to know whether you should take a trade on the first correction or at the top of the structure. That comes down to what I was saying yesterday. So let's take Euro Dollar as an example. At least it all refers back to yesterday's episode. So what we were looking at yesterday was about this area. So actually, let's take another pair. This is not the best example. Let's take this one. On dollar CAD. So higher time frame, we know it by now. Big retrace after we got very close to the low. Big retrace, looking for a correction to continue to the downside. So that's the higher time frame. Now we're creating this larger ascending. So we got the 3 touches at the bottom, and we got 2 touches at the top. So now we have the double top as an override, but let's just forget it for now. So what we're looking at is to get involved short from this area, from the 3rd touch of the ascending. So whether we get involved from the top of the structure, this is exactly the same if we were like up here. You understand. So we just need to look at how we approach this area. So as you can see, we're moving pretty impulsively right now to the upside. So if we keep impulsing like this, I will not be taking the trade short from the top of the structure. We would be like right here on a retrace, for example, because it's an impulsive move. However, if we approach in a corrective move, so an ascending within the ascending, for example, in this case, I would get in with a risk entry at the top of the structure on a 1 hour retrace, for example. Does that make sense? If we get here impulsively, it doesn't mean I'm not going to take the trade, but I'm going to wait for a little move down and maybe a 15-minute hover and look to take that. Something like this. Something like this. So that's the difference between getting involved straight here at the top of the structure or on the first flag. And also how clean the pattern is. So if we go back, now I can make the example on Euro Dollar. We're looking at this squeezing wedge type pattern, which if we go back to yesterday, see, we approached this area where we're looking for a buy correctively, but I'm not going to take a risk entry here on a retrace, for example, just because I know that this pattern is more unreliable than a flat flag, and we could just you could just get tagged in and then it keeps trickling down and then breaks. So that's why I wouldn't get involved straight off a risk entry here. And as you can see, we're currently trickling down. So what I'm going to do is wait for a move back up and get involved on the first flag. Whether it's here or higher here, it doesn't really matter. I hope that makes sense. Sorry, I'm going to catch up on the chat a little bit. Can you please go through Euro Dollar according to my analysis? Okay, well, we kind of were going through it right now, but I'll get into the DXY and Euro Dollar. So as you can see, we're getting the last move up that we were expecting. So we did correct for a little bit, which is very nice because it creates this ascending structure within. So that's just more confirmation that we're going to be breaking to the downside, and we're going to get downside momentum on dollar related pairs. So as you can see, we broke a little higher, so that's not a big deal. We can just evolve the structure, and it's currently retracing. So if we go to the 15-minute chart, what we're going to be looking for now is a correction, a 15-minute hover to get involved, obviously not on the DXY, but on the inverse, which is Euro Dollar. So now, this is why I didn't like this pattern, just because it can just keep trickling down, and we don't really know where the double bottom is. It could be here, it could be here. We don't really know, right? So I guess we could start evolving this, but it's very steep. I wouldn't be taking any trades like this. As I said earlier, wait for a push up, confirmation, and take that long. But obviously, if we go back to the higher time frame, the higher time frame is still to the upside. So I hope that makes sense. How to manage risk and money and entries. Okay, managing risk is very personal. I do 1% risk on per position. So if I take a trade, I'm gonna risk 1% of my account on it, and that's never gonna change. So you just need to decide what you're willing to risk. And entries, we kind of went in the entries before. So yeah. Do you trade investor capital? No, I do not. I'm trading my own capital at the moment, and I'm getting funded accounts. I'm in the process of getting my second funded account. I have a very small one, and I'm on step 2 for a larger one right now. So that's like the first step, and then the end goal in a couple years would be to get investor capital. I don't share my phone number or email. You could probably find my email easily, but I don't. I would recommend to DM me on Instagram if you're interested. I can pop it up on the screen right there. Can you relate the DXY with dollar Swiss? Absolutely. The DXY, it's the dollar index. So if we're going to get downside momentum here, it's going to obviously relate to all the dollar related pairs. So dollar Swiss would obviously, you need to have a look at the Swiss, what the Swiss currency is doing. But if we're getting strong downside momentum on the dollar, it's very probable that dollar Swiss will follow. As we can see, we pretty much, if we put them side by side, they're pretty much identical. So we're expecting probably downside momentum on dollar Swiss as well. And dollar yen and all the dollar related pairs, and upside on Euro Dollar. Mark said he made 25% for Q1. Yeah, I didn't make much in Q1. I was pretty not focused, which is why I'm going absolutely hardcore now. I wasn't working extremely hard, so I missed pretty much all of the good trades that I wanted to get into. So it's not a big deal. It's 1 quarter. I don't actually know what the what the total is, but it's nothing impressive. But yeah, that's why I'm focusing a lot. I'm working on my second quarter goals. I have my journal for my goals right here. And yeah, I'm gonna go hard in the second quarter, working extremely hard. I'm completely redoing my routine. I'm waking up extremely early, and with all of this quarantine stuff, yeah, I'm just working 24/7 pretty much. FTMO, yes, the account I'm currently working on is FTMO. I'm on step number 2. Cards from a FALCON Spanish member. Awesome. Hello, Mark. Are you a day trader or swing trader? I'm definitely not a day trader. I take on average 10 positions per month. I haven't been taking 10 a month for the first 3 months of this year. I've been taking much less positions. But yeah, I wouldn't say I'm a swing trader either. I hold positions from a day to a week, but we do have some longer term positions, like I don't know, like oil to the upside would be something I'm looking to hold for the longer term. Natural gas, I'm looking to hold for the longer term as well. So yeah, scammer has claimed and used your name to scam people. I'm aware. I've reported a few accounts, but due to this coronavirus, I actually got a message from Instagram that they're not reviewing the reports because they don't have the people to do it. So I can't really do anything about it. Just make sure I won't contact anyone through the DMs, and the only account I use is the one that's on screen right here. So correction, ABC on Euro USD. I'm not really super familiar with ABC patterns, but if that's like a 3-touch pattern, then yes, absolutely. Which broker? I started trying out Oanda very recently. I don't recommend it yet, as I haven't used it enough to be able to recommend a broker. But definitely do your own research, and depending on where you're located and what's easier for bank transfers and all that stuff. Dollar CAD is not correlated with the DXY. It's not that it's not correlated, because it is. Dollar CAD is a dollar related pair. So it is. If the DXY pushes lower, then we probably get downside momentum on dollar CAD. But it's not really about like correlation. I know that Euro Dollar and the DXY are inverse correlated at about 52%, but it doesn't really matter like the specifics. We know that if the DXY is pushing down, then we're looking for upside on Euro Dollar, and opposite on dollar related pairs, sorry. But I use it mostly like as a filter. Then you have to look at like all of the pairs like on their own matter. I don't really look at correlations that much, except DXY Euro Dollar. That's a big one. Most reliable pattern is a pennant flag which has a straight bottom, then a steep flag. Okay, yeah, the steeper flag is not that it's unreliable, because they work out very well, but the thing with steep flags is that they can keep trickling down. Like, like that, for example. So if you're looking at this here and you get involved, you get tagged in, and then it keeps correcting. Whereas a flat flag, it's much more reliable just because it's flat bottom, right? And in that case, what you're saying is something like this, I guess, with a flat bottom. Yes, that would be better than a steep flag in my opinion. But the flat flag, like, is much better than all of the others. So it's pretty much what we're getting. Actually, no, because it would be flat bottom. So yeah. Anyways, the FTMO restrictions, I got into it a little bit yesterday. It's definitely for the FALCON strategy, which is the one I trade. It's definitely not the ideal. It's more for day traders. You can't hold positions over the weekend. So that's a pretty big problem for me. But yeah, it's we'll work with it. There's probably better firms. I just haven't done enough research. What do you consider as top 6 in wildcards? Okay. So I have a lot of wildcards right here. I'm not going to trade all of them. I have a few that is just for reference and just to learn and monitor how they move. So usually what I do is I have this. So every weekend I go through all of these pairs. It's everything I trade. Sorry. And I start analyzing. So I go from here, analyze every pair. And what I do is, if Aussie CAD, I feel like there could be a potential setup or it's at a very key area, I flag it. And I have different colors for different things. So red is going to be top 6. This is maybe top 6, maybe wildcards. I have like, this is probably wildcards, and this is maybe if there's free space in the wildcards. So what I do is I go through, analyze, and flag everything. And then I select the cleanest 6 pairs, or the ones that I feel are better for the week ahead. And that's going to be my top 6. And the wildcards are pretty much usually from 2 to 4. We have a little more this week because there's just been momentum in the markets. So we have a few more, but I'm not trading all of these. And it's pretty much your backup plan. So in case some of your top 6 don't play out, you have some backup pairs that could maybe take a little longer to play out, but maybe not. That's pretty much the general idea. Yeah, so how do you manage to keep track of so many pairs? That's exactly the reason we have a top 6. So I'm going to focus on the top 6. And usually the wildcards I'll have 2 to 4. At least I'm not all the time flicking through like a bunch of things and going crazy. This is just because I've been analyzing by doing these live streams and stuff. I've been analyzing some pairs, so I have them in my wildcards, but I'm not going to trade. I'm not going to trade Pound Swiss this week. I'm not going to trade Aussie Kiwi. I'm not going to trade Aussie Dollar. I'm not actually might trade that. I'm not going to trade this. I'm not going to trade the DAX. So yeah, just try and keep 6 pairs that you think are going to be the best ones for the week ahead, and 2 to 4 wildcards. How long have you been trading for? I've been trading for, I have no idea, for a while. I joined FALCON just over a year ago, and I've been starting to become consistent quite recently. So it's been a couple months that I'm seeing a big improvement. Even if the first quarter wasn't great, I've definitely seen a lot of improvement. Are you on Telegram and Messenger at the moment? No. I only use Instagram. Hello, Michael. I'm good. How are you? What trading platform are you using? So for my charting and analysis, I use TradingView, which is what you're seeing on the screen right now. And to execute positions, depending on the brokers, I use either MT4 or the Oanda platform. Can take pound yen with a double bottom. Okay, so great transition to one of the topics I had, which I wanted to compare again pound yen and pound dollar. We got into it a little bit yesterday, and we got a little bit more development. So absolutely you can take pound yen as a double bottom. Oh, I assume you mean this double bottom right here. So you would take it like right now? Is that what you mean? Like this? Because if the thing is, this is definitely a valid trade, but the move up is very unclear price action. I really don't like this move up. We don't really know if this is going to be the bottom of the flag, if this is the bottom of the flag, if it's going to be down here. So the big one. So I assume this one. So yeah, this is definitely a valid trade. If we start trickling down here, we can definitely take this for a buy. But pound dollar is much cleaner. I know some people took a flag right here on the 15-minute chart, which is definitely a valid trade. We had this double bottom here, broke below, pushed up, got this 15-minute flag, and you could enter probably somewhere around here. You would have entered with the stop below, would have pushed to about just under 4%, and you probably would have gotten taken out either for a break even, either for some small profit. Why I didn't take this trade was purely because if we go back, we had this formation here, and yes, there was over 1%, so enough space to, if price reaches here, you can move your stop to break even. So if it comes back down, you don't take a loss. But this could have just turned into a bigger flag to come back to the downside like this. So that's why I didn't take that trade. And pound dollar looks much better than pound yen in my opinion. So if we look at pound dollar, we have this rising formation here, the squeeze, which we were looking at to break to the downside, come back to the double bottom here, and try and get involved on this area for a long. I think it's much cleaner. The move up is much more impulsive than pound yen. And we clearly know that this is going to be the bigger double bottom, most likely. So the other option would have been an impulse up and get a flag like that. But obviously it looks like we're going to be trickling down to this area now. So I would definitely choose pound dollar over pound yen. How often do you check the charts to see if any potential setup is happening? Okay, great question. I check the charts in the morning, so I wake up, do my forecasting straight away, and I set alerts. So I add alerts on DXY, but they got triggered. So let's see if I have still some alerts. Right. Dollar yen, I'm doing my analysis this morning, and I know that this needs much more development. It's forming this descending formation, which we're looking for a break to the upside and to get involved short around this area. So I know that's going to take probably a day or two. So what I do is I set my alert. As you can see, this orange triangle is my alert. So when price pushes up, I get an alert, and then I check the charts. But I try to stay away from it because I don't need to be checking the charts every hour if price is down here, because I'm interested in a short from this area. You're saving up for a go-kart. That's awesome. I haven't been karting in a while, and obviously with this corona stuff, I'm probably not going to go for a couple more months, which is unfortunate. But that's awesome, man. How do you calculate your risk percentage in MT4? There's this thing called position size calculator. I'll pull it up for MT4. So yeah, let's close this. So you just type position size calculator for MT4 in Google. It's this by Earn Forex. You just get this, and it tells you how to download it. You just scroll down here, and where is it at? Yeah, there you go. For MT4 and MT5, you download it. It goes. They explain everything in the video here, and you can use that. Alternatively, it's baby pips. You can use baby pips online, and it's going to tell you your position size and your lots. You said Trader's View. It's Trading View. I'll show you the website. Trading View. Right here. Trading View. The biggest mistake I've made in trading. Great question. I don't really know if I have the answer. I've definitely blown a few accounts in my younger days. But yeah, don't really worry about mistakes, because you're obviously going to make quite a few mistakes. You're probably going to lose quite a bit of money learning trading. It's kind of a step you have to go through. The important thing is learning from the mistakes. And if you blow your account, then put in place risk management, do a trading plan, like follow your risk management, because you can't blow your account if you're risking 1% per position. So if you blow your account, it means you're not following your rules. That's, I guess, biggest mistake, but I'm glad I went through it. I mean, at some point you learn that you got to put rules in place and stick to them. Right, great question. So when a trade goes in your direction as forecasted and I scale into the next position, where do I place my stop loss for the first position? So let's see if we can. Let's take dollar yen as an example. So this was an entry. This was a possible entry. So we have this larger wedge type pattern. It's not really a wedge, but it's more of an ascending. Anyways, with this double top formation, so I'll just take it as an example. Okay, I see what you mean. I'll explain it to you in a second. So let's say this is your first position. You enter on the retrace here with your stop below, above the double top, and this is your first position, right? So as price reaches the bottom of this channel here, you probably would have moved your stop loss somewhere around this area. So if I replay it back, you would have probably started moving your stop loss which, this is how I do my stop loss. There you go. Somewhere around here, right? Leave it enough room to correct and keep dropping. So obviously you're risk free already. So you have like what? Probably 2.7% locked in. I wouldn't scale into a position if you have the full 1% open. The minimum to get into a scale in, you need to have your stop loss at break even. So I won't go risking 2% on one position. Hope that makes sense. So as this develops, then we're looking at this as a scale in. So entry on the break or whatever, or maybe you would have entered somewhere here, double top. Let's just take that as an example. So this would be your scale in, right? Now you have your stop above here. Now it's just your choice, right? You're triggered in the trade, and you can either move your stop loss, your first trade, at the same level as your other stop loss, or you could leave it just above like this. Maybe this starts forming something like this, more of an expanding formation to come back up, and yeah, maybe you decide to leave your first one just above there. But anyways, I hope that helps. It depends on how you want to manage your trades. But yeah, scale ins only if you're risk free on your first position. That's just my preference. Trade through MT4 in phone or PC. I have them both. If I'm sitting at my computer, I'll just do it on the PC. If I'm somewhere outside the house and I have to get into a position, I'll use my phone. All right, you want to invest in trading, but you don't have the knowledge to trade. That's fine. I don't trade for people, but if you're willing to learn, especially now with quarantine, you have time, I definitely recommend FALCON, which is the course I've learned from and I'm still learning from. They have a free lesson on the website, and there's a YouTube channel that you can watch for free. And if you like it and want to pursue it, you can get a subscription to the course. Right. I've just been answering questions and I actually haven't looked at my notes, but we pretty much... Right, I just want to touch on one more thing. If you have any last questions, make sure to put them in the chat. I'm going to go over this last thing I wanted to talk about, and then we're gonna call it a day for this episode. We've been going for almost 40 minutes already, and I said that I wanted to make this shorter than yesterday's, but it's looking like it's gonna be around the same time. Anyways, I wanted to talk about this really quick. So this week has been quite corrective. I hope I'm not late. We're almost done with the episode. It's not an issue. You can always go back and rewatch it. As soon as it's done, it's going to be on my YouTube channel saved. So you can always go back and rewatch it. So last week we got quite the momentum in the markets. As you can see, huge retrace on the DXY and the dollar related pairs. So this week it's a little more corrective. So as you can see, last week we got this big push down, and this week has been a little more corrective. So moral of the story is that we're obviously going to get corrective weeks a little bit across the board. As you can see, pretty much all of my watch list has been extremely corrective this week, and there wasn't really the opportunity to get into any trades. But that's fine. Just make sure to stay away from, not stay away from the markets, but be patient, wait. There's obviously going to be corrective weeks across the board sometimes, but we're going to be waiting for the next impulsive move, and that's what we're going to get involved in the markets. So don't try and get involved when structures look like this, just because you're going to be taking unnecessary losses. And yeah, the first job of a trader, I wrote it on a previous Instagram post, first job of a trader is to protect your capital. Then second is profits and returns and all of that stuff. So that's why it's fine not to take trades on for a week. We'll come back next week, reanalyze everything, and get involved when the opportunities are there. Yeah, I'll check oil in a second. I'm seeing that dollar CAD is having a big retrace back down. So we could be dropping early on dollar CAD, which I presume on oil we got a big push up. Okay, that's a big push up. I wasn't expecting that. Now I see why you asked to check oil. Well, great that we caught it live. This is amazing. So, well done to those of you who got involved in this flag. I preferred to wait, which obviously wasn't the greatest idea, but that's awesome. So now that we're getting this push up, if we close anywhere near this area, we're going to be looking for continuation to the upside. That's a great sign on oil. We're looking at an entry around this area, but we broke early. So that's good news for oil. It's not a big deal. We still have, if we look at the daily chart, look how like 25% is just this move. Look at all of the space we have that we can make back in the longer term. So don't rush into it. Wait for confirmation. That links it up quite well to what I was saying before. But if we get a close anywhere near this area, this is going to be amazing. Obviously, dollar CAD could start pushing down earlier than this area, but in that case, we will wait for a break and get involved in a correction. Have you done any coaching calls with Neil or Jake? If so, is it worth it? I have not. Definitely more introverted, so haven't done that yet. But it's definitely something I will be looking. I will be looking into soon. Anyways, I hope you guys have enjoyed this episode. We got this crazy move on oil at the last seconds. If you have any quick last questions, I will be answering them right now before we end this episode 2. I really hope you enjoyed it. I have 33 concurrent viewers. That's awesome. Thank you guys so much for your time. Yeah, absolutely. No FOMO at all. If you've seen my reaction, I'm super happy this pushed up like this. I was definitely hoping for a move and a correction where we could get involved in, but absolutely no FOMO. As I said, look at all of the space we could be making back. So we're targeting the $60 mark on the longer term. So this is absolutely nothing. Look, it's just a retrace of last week, pretty much. Maybe a little double. But anyways, super happy. Gonna be monitoring this and hopefully we get a solid correction to get involved sometime soon. But super clean. Look at this descending here. We break the low, and then push up. So now we're going to be looking at a correction or a retrace. But anyways, position size calculator works for phone. No it doesn't. It's for the PC. This is why, guys, FOMO shouldn't even exist. There's so many opportunities. If we look at this move on dollar yen, like, look at the entries. There was one entry, I guess, here that would have resulted in break even or small profit. Other entry here, you could have taken this flag here, you could have taken this flag here. Like, there's just so many entries, so you definitely shouldn't rush anything or have FOMO just because something started moving. Do you prefer to take the reduced risk or risk entry on US oil? That depends. That depends on the developments. I wasn't looking at a risk entry. Even if we go back here, I was looking at this double bottom area. So if we're getting more of a corrective move, I usually, if the move is corrective, I would take a risk entry. But due to this very like messy price action, I would wait for a push up. Oops. I was waiting for a push up, get a tight flag, and get involved with a reduced risk. Like this. And nothing has changed. Just because the impulse is huge and not around this area, doesn't mean that I'm not looking at the same exact thing. Stocks or Forex, which is best? Two completely different things. They both have their pros and cons. It's just personal preference. And yeah, you might need a little more capital to get into stocks. So Forex might be more ideal if you have lower capital or smaller capital. Anyways, I think we're gonna call it a day on this episode. I really appreciate everyone's time. I hope you enjoyed. We're probably gonna be back here tomorrow, same time, for episode 3. I don't know how long I'm gonna do this for, but if you guys are enjoying them, then we'll keep going. So yeah, I appreciate everyone attending. Thank you for your time. Hope you enjoyed. As usual, make sure to like the video if you did. You can subscribe for more videos and the notifications to get a notification when I go live or post a new video. If you wanna talk more about other stuff, I'll put my Instagram here. You can DM me. I'll gladly try and answer your questions. Definitely awesome, bro. I really enjoyed the session so much. Cleared my doubts as well. Thank you, man. I really appreciate the kind words. It means a lot. I'm glad you enjoyed it. Thank you so much, guys. And I'll see you on Instagram or tomorrow back on the live. I will try and upload more. Oh, this video will be on YouTube as soon as I end the stream. It might take a few minutes to process and post, but it will be on YouTube as soon as possible. Thank you so much, guys. Really appreciate it, and I'll see you soon.